Okay, this is a really fun chart on slide 7. On the left-hand side is the average price of all homes in Denver Metro from 1995 to current. And on the right-hand side is just our top 25 neighborhoods. Notice any parallels between the charts. What things are similar about it? What things are different about it?
When it happened.
When it happened is the biggest one. How about the speed of the correction? Any differences there?
Took a lot longer for this market to get started again.
Yep, it did take quite a lot longer.
There's also a lot more fluctuation in the luxury market.
Yeah.
It's not stable.
Yeah, there's such a small sample size, there's not so many homes selling that it does bounce a lot more. So those are some good observations from it. So I think the things to take away from, if you're working on the buyer side for a luxury home, they may ask you, are these homes a relatively good investment compared to a normal home? Is that a question they might ask?
Mm-hmm.
This is a slide I think that would really help you to address that. I think what you can tell them is that your upscale house is going to a large extent mirror the overall market. What you'll see in a downturn, at least what we saw in the last downturn, is that if you buy a house for $300,000 or $200,000, what's your down payment like? Big or small?
Small.
So if you lose your job, how fast do you get in trouble? Really quickly. So if you're in an inexpensive neighborhood, they'll go into foreclosure a lot more rapidly. And once you get the first few foreclosures, elective sellers withdraw from the market and you only have bank-owned sales, and it becomes a self-fulfilling prophecy, so the knife starts to fall really quick. Corrections happen faster in lower-priced markets. It's a function of how big is the down payment and the economic security of people who buy those homes. Does that make sense? Intuitively, this sort of makes sense, right? If I'm buying a $2 million house, what's my down payment typically like? It could be very substantial. A lot of times it'll just be all cash.
Right.
So if I lose a job in a recession in a large house, is it going to take longer or a shorter period of time to get in trouble? You can drag it out for quite a while. Also, do you have more legal sophistication to fight off the bank? Generally speaking, probably so. So the fact that it took a lot longer to navigate the correction shouldn't arrive as a surprise. Does that make sense? Okay.